Okay, this is Rod Kusin and Spooman for Risk, October 14th, 2010, Thursday. We're into our second video. We just went a little bit over time in our last video, so let me pick it up where we left off. We just received a long signal here. We're looking for any evidence that the market is moving against us, whereby we should then receive a warning message if it does. At the moment, it appears to be working in our favor and no warning message is taking place. High probability retracements above the market are now being hit, and so we're just going to let that continue to move and see if anything takes place to suggest to us that this market is moving against us. That's where we left off our last video. We may have cut that short because we weren't watching the timing. So we'll continue on live here for a couple of minutes to see if either we hit our profit target or, okay, we hit the profit target, so no message took place there. So we'll look for another opportunity to illustrate this after we move back down and then hopefully get another message, or get another trade, I should say. Okay, we're looking at one of our other charts where the trend indicates that we're long, and so a trade based on a slightly different strategy took place right here, and maybe we can watch this to see if we're going to get any kind of a warning signal. Again, market is moving in our favor, but you notice this retracement below our entry. When we have a retracement that's very close to our entry, that alone is reason for caution. Today, thus far, our retracements have been 95% accurate. So while we cannot determine when they're going to be hit, the probability that they will be hit is very, very high. So having taken a long trade here with this retracement below the entry would merit a very tight stop. Very tight stop. Nevertheless, the trade seems to be working. We're hitting our next retracement above the market. And we expect that this will continue to move up. Now we're hitting our first profit target on our first trade there. No indications of a reversal against us. And looks like our next profit target's going to get hit. Oh yeah. Yeah, she's going to go right up there. Right up there. we can pretty well tell when that's going to tick up and hit that retracement at 68.75. I had a little bit of a move down here. Now you see the retracement back there. Right here. Okay, she could drop. We expect a quarter point drop here. Okay, looks like it may not drop. Appears to be on the way back up now. But no message, no indication that the trade is in jeopardy. So now we may just very well move right on up to 68.75. Not yet. You see the retracement line forming at the bottom here. Looks like we're going to go back down and test that. Now, this is a good indication of where we're not able to say in advance whether it's going to go up first before it comes down or come down and then go back up. Can't tell that. We'd have to be watching other indicators to see what the probability is that it'll go up versus down or the other way around, but right now can't really say. Yeah. Okay, she came down, hit the retracement line. So came down, hit this, and now appears to be on the way back up. Another retracement is forming. So apparently we're going to continue to test that low. But as we move on here, we had another buy signal there. It simply means that all of the conditions that were set up in the strategy for a buy formed on that bar. It does not take into consideration the existence of a retracement line below the market. Now, whether that's going to work or not remains to be seen. but trading when you're within a quarter point of a retracement line is a little bit risky. And by that I mean taking a new position when that retracement line already exists. That's a bit risky. Holding a trade from our previous entries, there's not as much of an issue there. And see, we're right back down. Right back down to the retracement. Now it might be better to enter a trade. Because you had 2 ticks below your best possible entry here, and you knew that. So why wait? You might even be better off if market conditions indicate we're long, put in a limit order to buy at that price rather than to take a market order 2 ticks above where we already expect the market to go. Okay, looks like we're headed back up now. Apparently that was enough to get the buying going back in. There's our automated alert of the bias. Market continues to climb, hits the retracement that we expected, and it looks like it will continue to climb up. So we're going to hit our profit target on this one as well, and we're going to let this run just a little bit longer. And here's the reason. While these trades will probably hit their profit target, this trade may not. The market may in fact turn against us, so it will depend on how things turn out, whether we get any warning messages. Normally what we do when we have multiple trades in the same direction, we only issue a warning based upon the initial trade. If this trade is still active, then we'd only issue a trade if this trade, we'd only issue a warning if this trade has the potential of being stopped out. We're not going to worry too much about these trades. So you have to be a little bit cautious if you're entering late into a move, because the later trades have a much greater probability of being stopped out. And it would be just too confusing on screen to show you which, or try to point to which of the trades have an issue. So we've elected to choose only the initial trade. We'll give you a warning against that. Now we saw some indications on one of our other charts that this market is liable to be coming down. So these 2 trades here are pretty late. So as we mentioned, got to be very cautious here. It may not be a good idea to hold those trades. Instead, just allow yourself the privilege of having a 1 or 2 tick profitable trade and dump them. There's too much of a downside risk there. We do have a retracement up here, but even so, we can't tell when that's going to take place. The market could move down quite a bit before it goes back up. So this would be real important to play those trades conservatively.